The first half of 2026 is behind us. As investors head into the second half of the year, inflation, the monsoon, China's economy, and India's AI-led infrastructure build-out are emerging as some of the biggest themes to watch. An Abakkus Mutual Fund report highlights 10 key trends investors should keep an eye on in the second half of 2026. India's retail inflation rose to 4.38% in June, moving above the RBI's 4% medium-term target for the first time in 17 months. Higher food and fuel prices were the main drivers. If inflation remains elevated, expectations of further RBI rate cuts could be pushed back, affecting rate-sensitive sectors such as housing, automobiles, and interest-sensitive financials. That makes inflation one of the biggest macro variables investors will need to track in the months ahead. Next is the monsoon. As of 12 July, India was facing an 18% rainfall deficit. In fact, 15 states reported shortfalls of more than 20%. If the rains stay uneven, food prices could stay high, and that would hit both consumers and rural demand. China's economy is also on investors' radar. Its GDP grew 4.3% year-on-year in the April to June quarter, the slowest pace since the pandemic. Despite global uncertainties, the report expects India to remain one of the world's fastest-growing major economies, supported by domestic demand. One of the biggest long-term themes is digital infrastructure. According to the report, India's data center ecosystem could become a $90 billion opportunity by FY35. The growth is being driven by AI, cloud computing, and rising data consumption. And the opportunity goes well beyond data center operators. Engineering firms, power equipment makers, cooling system providers, electrical companies, and networking businesses could all benefit. The report also flags 3 sectors worth tracking. First, pharmaceuticals. India continues to depend heavily on China for imports of key active pharmaceutical ingredients. Any supply disruption or geopolitical tension could raise costs for drug manufacturers. Then, electric vehicles. The two-wheeler EV market is becoming more concentrated. TVS Motor, Bajaj Auto, Hero Motocorp, and Ather Energy accounted for most of the incremental registrations during the first half of 2026, suggesting large players are strengthening their position. One more pressure point is fertilizers. Sulfur prices have surged, driven by ongoing tensions in West Asia. That is pushing up costs for fertilizer makers and could squeeze farm economics down the line. The report also points to a few more themes. Demand for generic semaglutide used in obesity treatment has moderated after an initial surge, pointing to more measured growth in the market. And companies with strong consumer brands continue to build long-term pricing power and competitive advantages. So what is the takeaway? The second half of 2026 may be driven less by broad market momentum and more by sector-specific opportunities. Themes linked to digital infrastructure, manufacturing, and domestic demand remain in focus. Meanwhile, investors should closely track inflation, the monsoon, commodity prices, and global supply chain risks. Follow Business Standard for more stories.